Hello and welcome back to my weekend update on the financial markets. My name is still Jens and we will cover today the price action of S&P 500, US oil, gold and Bitcoin against the US dollar. We are currently on an open profit of 5,700 US dollars, completely risk-free, and I will explain you why in the following minutes. Let's start with the weekly time frame on the S&P 500 index. Yeah, S&P 500 on the weekly, we can see we are still in uptrend, printing new impulses to the upside and corrections to the downside. Following this uptrend that's still intact, all the trend lines are not broken yet. I was able to move this one here from this point. There was a broken secondary weekly uptrend line to a now valid secondary uptrend line that's not broken, and that's a positive sign. If we drop down to the daily time frame, we can see price action in more detail. I entered the trade after the last pullback and the break of the pullback to the upside with a long trade and stop loss below the pullback movement. After that, we broke the all-time high to the upside, and that was a sign that we can secure now this open profit with taking the stop loss level to my entry point. So if price decides now to move against my predictions and end this uptrend and goes into a downtrend, we will get stopped out of this trade with a stop loss of 0. So the trade will cost me only my fees I paid for it, and so the $3,000 in profit are risk free for me. The target is a little bit higher, slightly below the 6,000 point mark, and that would be a take profit of 5,970 US dollars, or nearly 6% of the account balance. That would be pretty sweet. So I let the trade run because I expect maybe a pullback to this level here, this point here, or this support and resistance zone, and from there on new all-time highs. Why I have chosen this take profit? I think this take profit isn't so bad, because if we look at the 4-hour time frame and you use these Fibonacci lines from here, the low to the top and back to the low, then you can see that this one here is the first area where you could have taken a take profit, but the risk reward ratio wasn't good enough for me at that point. So I chose this one, the 1.618. That's a pretty important Fibonacci retracement level. And so I placed my take profit slightly below it. Here we can see that the MACD at the 4-hour time frame is crossing to the downside. So I would expect a slight pullback here, maybe to the last all-time high, or a little bit deeper to this daily uptrend line. And from there on, we would see then recovery of price and starting again the uptrend into the take profit. That would be nice. The other scenario is that we will turn, break the daily uptrend to the downside, make a retest, and then get to our entry level and stop us out of the trade. From there on, I would wait what price is doing, if we will recover again at the weekly secondary uptrend and start again from there, or even break the secondary weekly uptrend line also to the downside, and then that would mean lower prices. But I think the likelihood of that is not that huge, so I stay in this trade. And if you have an open trade, I would recommend you that too, even if you have to make your own research and choose your own strategy. That's it, I would say, for the S&P 500 index. Let's switch to US oil. US oil also on a weekly time frame. Here we can see a red solid downtrend line. That's the monthly one that got broken to the upside, and after that we moved into a weekly consolidation here, marked by this weekly orange downtrend line that got broken to the upside, which was first a bullish sign, but afterwards this 200 moving average that acted as support in the past got above price, and price got also rejected at this point and moved lower. If we drop down to the daily time frame, we can see that price moved in the end of this weekly consolidation into a daily triangle, and this formation is normally known for, if we break out to one side, that we will continue this move in this direction, and the following trends are either upward or downward. We broke this triangle to the downside, so more bearish movements have been expected, and also I traded like that. My first trade was from, I think, around here to the downside, went into profit, and now I'm currently in a second short trade on US oil. If we drop down to the daily time frame, we can to the 4-hour time frame, we can see that we have here 4-hour support and resistance zone that matched perfectly with the daily downtrend line, and after price went nearly up to this daily downtrend line and to a moving average, I went into the short trade after the 4-hour blue dotted uptrend line got broken to the downside. After that, price immediately turned against me and moved back higher, but wasn't able to make a higher high. Price created here a double top scenario, and after that, price declined sharply. After going so much into my profit area, I moved my stop loss to my entry level. So the trade is also risk-free. I only risking my trading fee if price will go against me and hit my stop loss. So no real loss possible, only opportunities in the lower direction, and that would mean $1,000 or 1% of my account balance in profit. Yeah, I expect that price will turn soon, maybe here at the 4-hour blue dotted downtrend line or a little bit higher. Then we will see the turn and finally take out my take profit level and the last low, retesting probably this weekly support zone here before continuing with higher prices, but we will see. The other scenario would be that price will recover all the way back up, take me out of my trade, and also break this daily wide downtrend line to the downside in combination with the 200 moving average. If we would see there then a retest and a break of the retest to the upside, that would be also a valid trading setup for a long trade. Could look something like that. Stop loss below the pullback, entry above this correction, and take profit around the area of this daily dotted downtrend line, which was part of the triangle. But I will inform you in my next weekend update if something like that happens. Till now we stay on course with our short trade. And yeah, that's it for US oil. Let's switch to gold. Gold at the weekly time frame, we can see that we are in an uptrend after breaking this often tested resistance zone to the upside, and since then gold knows only one direction, and that's up. But we can see also here on the MACD indicator that we are pretty oversold already. So I think that in near future a correction has to happen so that the market can take a breath from all this upside movement. Since we have broken this resistance zone to the upside, we have made 3 impulses to the upside. The first one was that one that broke the resistance to the upside, then followed by the first correction, second impulse, second correction, and now we are in the third weekly impulse to the upside. And after the end of such an impulse normally follows a correction. We are waiting for that. We can see it more in detail at the daily time frame. Here we have these 3 impulses so far, and corrections are forming this daily solid white uptrend line, and we could also create a secondary white dotted daily uptrend line. We moved first into a consolidation zone at the daily before breaking again out to the upside, and here I was drawing in an A, B, C, D, E wave. It's after the Elliott wave theory that's describing an uptrend, and normally after that point E ending we see a good correction in form of an A, B, C. Maybe this one goes even deeper and could also look like that, but we have to see what the market is giving us and reacting to that. So is point E already there? We can't be sure about that yet, but at the 4-hour time frame there is a chance that point E is in, because the MACD indicator is turning and also the 4-hour blue dotted uptrend line is broken to the downside. If we say this is point E, then above point E would be our stop loss. If we are wrong, the entry would be if we are retesting the lows that have been done intraday here, and the take profit would be conservative above our first target of this ABC correction, and that would be above this daily secondary uptrend line and also above the last 4-hour consolidation zone here. I think you shouldn't be risking too much here, maybe 0.5% of your account balance like I did in my last US oil trade, because it's well possible that we will see another third shoot impulse, or then seeing this one break, making a retest, and then continuing this ABC downtrend. Yeah, but it's absolutely a trade that's possible for the week ahead. Yeah, what's happening if this one here is not support and we will break that through? That's pretty simple, because if we break this one through, we would wait for a retest, and if this retest of this daily secondary uptrend line got broken to the downside, we could expect that we will see further down movement all the way back down to this daily solid uptrend line would be absolutely in the range of this consolidation zone, which will give price some support. And after that, I would expect that we will see a turn in seeing not lower lows and lower highs, but higher highs and higher lows, and continuing the overall uptrend. But I keep you updated on that in my next weekend reports. So subscribe to the channel if you haven't yet. And yeah, that's my prediction for US oil. If you want to trade, I would recommend you the short side, or you say it's a really strong bull market, I don't want to risk anything here, then don't short it, just wait for what price is doing. I think trading it to the upside is way too risky at the moment because we are that much extended to the upside. Maybe then just wait that we will see the correction and then wait for seeing price bottoming out, changing from lower lows to lower highs and lower lows to higher highs and higher lows, and that would be the technical sign that we see a change in trend from a downtrend to an uptrend again, and then trade that one to the upside. But like I said, I will cover that in future episodes. Let's switch to Bitcoin. Last but not least, the Bitcoin against the US dollar. Here on the weekly, we can see that the MACD is about to cross to the upside. That would be a really bullish sign for Bitcoin and maybe mean that we will leave this consolidation zone here to the upside and creating new all-time highs, but we will see then, because we can be only sure if we finally leave this daily price channel to the upside. That would be great. The trade could be like that. We break this to the upside, make a retest, maybe bouncing here at this daily resistance zone here, retesting the upper side of the price channel, and then break this shorter correction here to the upside, and that would mean we see new all-time highs. And the trading setup would be like the following: we enter the trade after getting above this high here. The stop loss would be placed below this movement. But I will cover that probably in later episodes, because I'm not sure if we see that one next week. But what I could expect next week is that we will see in my current trade a take profit, because after retesting the lower side of the channel, I traded the breakout of this short-term downtrend to the upside with a long trade, and I already moved my stop loss that was placed below the lowest point of the movement to my entry level, because I have seen that we left behind this daily support and resistance zone to the upside, and now also finally the 4-hour resistance zone here from this high. We have consolidated a while below that. That was a small risk factor that we will turn here and take me out, but now we are also above that. I could expect that we will see a small retest, maybe to this, back to this 4-hour support and resistance zone, or even lower to this lower side of this consolidation zone, but then turn again and take out my take profit at the lower side, at the upper side of this price channel, because maybe we'll take another round here, turn here, and move again back lower to retest again the lower side of the channel before then finally coming up someday and breaking it to the upside. MACD at the weekly time frame shows that it's definitely possible for next week to break above that, or the week that follows afterwards. So stay cautious about the situation, and if you have an open position in Bitcoin, maybe close it here out, because the risk is really high that we'll turn here again, or at least reduce your position. But this trade is also risk-free like the other two, and that's a positive thing. So if all of them would go into take profit, that would be a pretty nice row of winning trades. But if they don't, I don't worry, because I can only lose the fees I paid for the trades. That's a good situation to be in. Yeah, that's it for Bitcoin and for all the analysis for this weekend. I hope you're doing well the week ahead, and we hear and see us at the next weekend report. Stay tuned. Bye bye.